How to make $500 a day with trading. I'm going to give you the 5 simple steps that you can use to make $500 a day with trading. Let's get started. So the first step I want to discuss is realistic expectations. And I'm sorry to break it to you, but you're not going to be able to make $500 a day with trading. No matter how good you are, no matter what anyone else is going to tell you, it's just not going to happen because you will have losing days. You cannot win every day. You cannot win every week. You cannot win every month. It would be great if that was possible, but it's not possible. So please keep that in mind because it's such a difficult topic and so many gurus will tell you you can make X amount per day, but it's not going to happen. So before you exit this video, I'm going to actually give you the steps to how to actually become profitable. So not 500 a day, but just long-term consistent profitability. So first, get your realistic expectations right. Hedge funds, big trading firms, they have losing months. They have losing years, losing weeks, whatever the case may be. They have bad periods. And that's because the markets cannot be predicted every single day. Yes, you can have an edge, but it does have to play out over time. Now, how to get there? So a simple way to get an income from trading is building a strategy around the opening range. For example, if you trade indices, you're going to want to trade the S&P, for example, or the Nasdaq, and you want to trade a breakout of the opening range. Why? Because it's quite easy to define, it's easy to backtest, it's very mechanical, so you can easily get statistics on it and make a clear plan to trade it without mistakes. And that's really important. So for example, let's say you define the opening range as the first hour of trading after the market opens. You put in the high, you put in the low. Then when either side of those breaks, you're going to expect a continuation in that direction because the indices are trending. They have a trending nature, they are a trending market. So if you see a breakout of the opening range where usually a lot of volume is going to be traded, you can expect a continuation. So you want to trade the breakout, follow the volume, follow the momentum, and then build a strategy around that. And there are so many variations that you can find online about breakout trading, about trading the opening range. So if you do some research, you're gonna find good opportunities there. The next step, step number 3, then becomes backtesting. And backtesting is so complex, but so important. And I'm gonna give you a few tips because almost everyone does backtesting the wrong way and therefore you get the wrong results and therefore you lose money with live trading. So when you're starting with backtesting, you wanna keep a few things in mind. Basic idea should be simple and should somewhat be profitable. You should include your trading costs when you're backtesting and you should do cross-market validation. Those 3 things are important in the first stage of backtesting. The second phase is going to be optimization, and that's where you want to use out-of-sample data. So let's go to the first phase. So the first phase, you define a very simple strategy. For example, if the high of the opening range gets tagged, you will put in a buy order and your stop is going to be on the low end of the opening range and you're using some kind of trailing stop or exit indicator, whatever it's going to be. Really simple. Then you want to test that on the indices. So let's say you pick the Nasdaq, you want to test how that performed the past 10 years. Did it make money? Yes or no? You do want to include your trading costs as well. And then after you've tested that market, you should have quite a decent sample. And you can see, okay, if I traded it like this, it would have made money, yes or no. If it did make money, but it's not, the best or the smoothest equity curve, that's fine because you haven't optimized anything. So then you want to test that basic strategy also in other markets. The DAX, for example, Euro stocks, S&P, some other indices as well, to see, okay, how does this basic idea perform in other indices? And you basically want to see that it performs kind of similar. Like you don't want to test 6 indices, like you test the S&P, it works great, but then in the other ones you test, it doesn't work. That's a bad sign. So simple idea, gather the data for 10 years, test on different markets that are in the same basket, if you will, and then add trading costs. If the basic idea has performed over time, but it's not the best, but there is a simple foundation. Then you can continue with optimization. And this is where it really gets tricky. And this is where most people go the wrong way. They optimize based on the 10 years they tested. So they take a look at the whole 10-year period, and then they're like, okay, if I did this, it made the most amount of money, therefore I'm going to use it with live trading. Big mistake. Because then you optimize on that 10-year period, and that 10-year period might reflect what's going to happen in the future, but it's not going to be exactly the same. So if you fine-tune everything based on that 10-year period, very high probability that the next 10-year period will be slightly different, and therefore the strategy will fall apart. And that's what you see happen so often. So how do you want to do this? I'm a very big believer in keeping things simple and not optimizing things too much. So if you're going to optimize, only optimize, use one or two filters that you're going to use to optimize your strategy, and use out of sample data and use filters that make sense. If you keep those rules in the back of your mind when you're optimizing, it's going to help a lot. So one of the best ways to do out of sample testing is going to be walk forward analysis, and you can find a lot of information about it on the internet. But essentially, you take one period in sample, you find the best way of trading the strategy during that period, and then you walk it forward for 6 months or a year, something like that, to see, okay, how do those settings perform there? And then you keep repeating, next session. Again, you can find a lot of information about it. But when you do that, you can see, okay, if I optimize and then run it for a certain period of time, does it still continue to work like that? And that's your out of sample period. And then you get another out of sample period. And that way you can really test if your optimization is robust and if it works well. You don't want to do this with a bad foundation. So again, the foundation, the unoptimized strategy should somehow be profitable, because you don't want to have a strategy that's only profitable because you optimize certain filters, and if you don't do that, or if you do it the wrong way, the strategy doesn't work. That's not what you want. So that's basically the next step, optimizing to do it the right way, to find it fit with your needs. Then the next step becomes trading it on a live account, a small live account, for a certain period of time, usually a few months. If you can execute the strategy there without making mistakes and the performance lines up with what you did in your backtesting, then you can scale up, and you cannot make 500 a day, but you can make thousands per month on average. And yes, you will have losing months, like I said in the beginning, but one month you're going to make 10 grand, the other month you might lose, then the other month you maybe make 10 grand again, and that evens out. So it's not going to be every single month you make a certain income, it's going to be unevenly distributed, and that's just the nature of trading, and that's what you're going to get used to. But that's how you can do it. That's how you can get an income from trading. Getting a system, testing it the right way, optimization, testing it live, and then scaling up capital to get an income from trading. So hopefully you learned a lot from this video. If you have any questions, comment down below. I will help you out there. Like this video, subscribe. One thing I want to say is that below this video is a link to my free Discord channel where you can connect with me, where you can chat with me, ask me questions, and I answer within a day usually, so you can get a lot of free mentorship there. Thanks for watching. See you next time.